Thanks for tuning in to Talking Point today. Now, if you've heard a whole host of our market related, investing related guests about what is it that they're betting on, I think almost everybody unilaterally is betting on the rural side. The question is, I mean, with the monsoons having done so well, can it actually surprise on the upside? Now, the thing about this particular episode and the commodity that we are focusing on, that is sugar, is that it's not as much maybe about the monsoon as it is about policy changes that impact this sector. So I'm sure monsoon plays a part as well. So we thought we'll get in somebody who has the perfect handle on this entire space and is currently an unrelated, unbiased entity, and therefore will give us the true blue picture of what the next 6 to 12 months could hold in store for sugar and the related companies. Mr. Narendra Murkumbi, co-founder of Shree Renuka Sugars, but now not in any fashion associated with that company in the direct sense, but an industry veteran for many years, as you would all know, joins us right now on the show. Mr. Murkumbi, so good having you. Thanks so much for taking the time out and speaking to us.
Thanks, Niraj. Thanks for calling.
Hope all is safe. Just before we get to sugar, just one quick point, because you would understand this so well. Almost everybody is saying that the rural space is the one which is right now flush with maybe some bit of income, a better shape than what the urban space seems to be in, and therefore rural focused businesses would do well. What are your thoughts here?
So that's absolutely correct. If you remember right from March, the lockdown has been far more liberal in the rural areas. And there were exemptions for agricultural activity almost starting on the first day. So relatively, agriculture and agriculture related businesses have escaped the worst of the lockdown. And also, two other factors is the monsoon has started off well. Of course, there's a long way to go, another 2.5 months, but very good in terms of how the monsoon is shaping up. And secondly, there has been a focus by the government also. Some MSPs have been increased. So to that extent, farm prices should also be better. And this reverse migration from cities actually means that there is more labor available for farmers. So funnily enough, it is actually a positive for agriculture.
Okay. And would you reckon that this could be a long-lasting thing, Mr. Murkumbi? Or I mean, of course, it's season for seasons, but my question rather is that with the reforms that are being spoken about as well, I think it was Ashok Gulati or somebody else who said that the current reforms or that the government has unleashed on the agri side are similar to the kind of reforms that the Manmohan Singh government enacted in 1991.
So I wouldn't go so far as to say it's a 1991 moment, but I think it will considerably increase the efficiency of the supply chain. However, in my opinion, the benefit will not necessarily go to farmers. The overall supply chain will become efficient, but the value could actually come to the aggregators, the large new retail giants who are coming up. They'll be able to procure with less intermediaries. Whether that price advantage or saving goes to the producer or to the buyer is an open question. I tend to think, in fact, that it will be the buyer who will get it, and they will pass on a substantial part of it to the consumer.
Okay.
But it will make the chain more efficient. Yeah.
Okay, Pepper. Now let's talk about sugar, because that's the conversation that I wanted to get your thoughts on. There are a lot of things being spoken about. One of the media houses did a story about how the MSP will see a rise of 2 rupees as early as this week. And I presume you told me as well that this is a season for policy changes. Can you dwell a bit upon this?
Yeah, so this is the quarter when normally, the sugar industry for the last 4-5 years has now been regulated both on the sugarcane price as well as the sugar price. And that has actually stabilized the sector because the government now decides both and therefore kind of decides the margin. And there is the common interest between the industry, the government and farmers group keep that margin positive so that farmers get paid on time. I think I do believe similarly as what you quoted that there is going to be an increase in the sugar price. It's imminent. I believe it's going to be 2 rupees a kilo. And at first glance, this means actually an increase in EBITDA margin across the board of 6%. Plus, since the industry today is carrying maybe about 18 or 19 million tons of sugar, or thereabouts. There is a large inventory gain on this, almost 3,600 crores. So that would be a positive. I would also expect down the line, maybe from 1st October, an increase in the cane price. Because the CSCP, I believe, has recommended an increase of 100 rupees a ton or 10 rupees a quintal. But even when you take both together, the net increase in margin would still be about 3.5%.
Okay. So how would this settle? Because I believe in an earlier conversation that I've had with you maybe a year back or thereabouts, you had mentioned that it is this MSP price which is giving this buffer to the Indian companies. Otherwise, when the international prices had collapsed, the state of the industry would have been much different. Now, actually, we are seeing maybe a possibility for 2 rupee hike. How significant would this be, not just for EBITDA for the current season, but for future as well? How does this shape up?
I think what the takeaway here is now that the government is comfortable with this policy, the policy is working, and one can assume that this will stay for a fairly long time. The international price, of course, is much lower. It's about 11 rupees lower than the domestic price per kilo. But there you have an export subsidy to push additional sugar out into the world market. So I would say that the very fact that this policy is now almost become a norm and stable is very positive.
Yeah, it is. Actually, just before we get to the other nuts and bolts, it's probably is showing that the market seems to be recognizing this, Mr. Murkumbi. A company that you founded, Renuka Sugars, for example, the stock price is nearly doubled. Balrampur has done well, and they've announced a buyback, if I'm not wrong, as well, at a slightly higher price. It seems to be showing in the way the confidence of these companies is, and the way the market is treating some of these companies as well, or the stocks of these companies as well. Any thoughts here?
Yeah, I think a significant portion of the listed companies, sugar listed companies, have deleveraged rapidly. Taking because of the stable policy environment over the last 3-4 years. So the deleveraging is obviously showing up in the stock price. Renuka itself, if it has publicly announced that they're going to refinance all their debt. The parent company is putting almost $300 million into the company. In addition, for South Indian companies, we are going to have a better crop this year. I mean, Maharashtra is going to be up from 6.1 million to 4 million in the coming season. Karnataka is going to go up from about 3.4 million to 4.4 million. And also now we have a good monsoon started. So all the South Indian companies which were under a little pressure because of lower production last year, I think things are looking up there. In addition, India is a global refining hub. So between Renuka Sugars and EID Parry, there are two global sites replicating in a small way the same thing that Reliance has done for oil refining, which means we have global scale, globally efficient capacities which are purely export focused. And refining, while the world sugar price has gone down in the last 3 months post-COVID, the refining margin actually went up quite significantly and made high recently at $135. So that is also a plus for these two companies. Both of them have, between them, they have more than 2 million tons of annual refining capacity, which is completely world market based.
Okay, and I'm guessing that that's an added incentive because I'm guessing one is the cushion that comes in from a higher domestic price, and the other is the ability to be able to export even when the prices may be volatile or otherwise. So, Mr. Murkumbi, how are the pieces set now? Because I remember all through these last 15, 16 years, when we've talked about sugar, we've spoken about sugar being the bit of a bugbear, if you will, but the ancillary business is really giving that bit of a spurt. Ethanol, for example, or refining in the case of Renuka when you were there, or even currently, or maybe even a Bagasse, Cogen, etc. How do the three pieces now interlock and fit in the current scenario?
So I think sugar product was lagging in terms of contribution to the bottom line all these years, and it was also very volatile. Sugar has come back, and that's the reason why profits have gone up, debt has gone down for all well-run companies in the sector. I think in cogeneration, actually, that in line with the overall drop of energy prices in the country, there have been reductions in the regulated prices of cogeneration power in various states. We saw it in UP last year. We expect it going forward in Maharashtra and Karnataka. So I think cogen, we've seen the peak in terms of profitability, and the market has already taken into account that prices are now going to be lower going forward, in line with the overall drop in cost of production of energy in the country. In ethanol, I think we've had a very good policy for the last couple of years. Oil prices are significantly lower at the moment compared to last year, but again, we have a regulated ethanol price in India, and the substantial capacity now in the industry to convert juice into ethanol as well as bee molasses into ethanol. I don't expect an increase in the ethanol price, but I don't expect a drop either, right? So I would say that co-products are flat to a little bit lower in terms of contribution over the last 2 years, but sugar has more than made up for it, and this expected increase will further, boost profitability of the sugar segment.
Just a follow up there. You don't expect any issues as far as offtake goes because crude prices are lower, but the ethanol offtake would continue at the current prices, you reckon?
So there has definitely been massive reduction in consumption in in April, and now it's getting better. But if you see globally, wherever lockdowns have been lifted, petrol consumption has come roaring back. So I don't expect this to be more than a 3-4 month phenomena. And anyway, for last year, the offered ethanol was far less than what the oil companies wanted. So I would say that even with this kind of loss of consumption in the last 3 months, the oil companies actually would still be able to offtake whatever was offered up to November, which is the old tender.
Okay. Sir, any thoughts on the international pricing scenario? You mentioned briefly about the kind of movement that we've seen in the last 2-3 months, but how does the medium-term picture look like?
So actually, way back in February, we were moving very nicely into a deficit. 2020 was going to be a deficit year. India had committed for export or already exported more than 5 million tons that had been easily absorbed. So that had reduced the surplus in India as well. But then COVID happened. And the main effect of that has been not just a temporary dip in sugar consumption, which has been short-lived, but more importantly, a drop in oil prices. So we were at around the $60 level. We are back down to $40. That has changed the parity dynamics in Brazil. And Brazil is now expected to make, compared to the February estimates, Brazil in this calendar year or this season will make about 5 million tons more sugar. That has actually tilted the world market from a surplus to from a deficit to a surplus. And that is why the sugar price has dropped from 15 cents to the current level of about 12 cents. However, having said that, I don't see much further downside. Maybe it might go down to 11 cents. But it is at a significantly lower level than last year. But one must remember that at this level also, and if, as expected, the current level of sugar export subsidy continues, India should be able to export another 5-6 million tons next year.
Okay. Even if it is a slightly lower price. Okay. Then let's wrap up this conversation with 2 questions. One is a repeat of sorts of the previous one because I would want more thoughts there, but before that, which is on refining. But before that, would you reckon that how the industry used to be, maybe in investors' eyes or maybe in the eyes of the promoters as well, as we discussed, that sugar used to be saddled with a lot of other issues and other ancillary products used to make up. Now that sugar has, in your words as well, come back with a bang of sorts, does it give confidence to promoters, to entrepreneurs, etc.? If you were handling Renuka, would you think of expanding capacities in any fashion whatsoever? Would you believe that the investor appetite towards and outlook towards this sector would change meaningfully because of the predictability of sorts of revenue?
So I think right now the market is probably not giving enough credit to the industry for the enormous stability in policy that has been visible in the last 3-4 years. It's still being seen as a cyclical industry, whereas in fact it has, before and even during the COVID period, it has been actually one of the most stable industries. And secondly, I think an important part is actually the heavy risk takers like myself are actually no longer in the sector, and it's the ones who have been cautious and very conservative who actually built very strong balance sheets. And I think the market is rewarding those companies, and that's the signal. I think the people who have really done well have been the ones who have been conservative. So I don't see even now, despite almost debt-free status, anybody trying to aggressively expand or consolidate the sector.
Okay. One last thing, Mr. Murkumbi, since you mentioned a big thing, and that is at least the two names that you spoke about, because those are the two with the refining capacity. And you mentioned that it was almost similar to what some other industries like maybe Reliance was doing on the oil side. How big an opportunity or a paradigm shift could this turn out to be? Would you believe that if there is success that these companies have tasted on the refining front, on the export side, could that expand? Could that materially add to the attractiveness of some of these companies? Could other companies think of following suit as well?
I think entry barriers are high. You can't enter the global scale refinery. You can't build for less than maybe 1,200 crores today. Okay, and these companies built it at lower cost, and they're all kind of depreciated assets now. Uh, they're doing already about 5 to 6,000 crores of export turnover, about 1,000 crores of domestic value addition. I don't really see it very easy for a third person to step in into this sector. It's also very different from domestic business. It's a very it's a completely world market kind of export business. You're buying raw sugar from the world market. You're selling white sugar to the world market. So in fact, it's a very different business.
Okay. Well, this was insightful, as most conversations are with you, Mr. Murkumbi. Thank you so much for taking the time out and this candid interaction. Appreciate
Thanks.
you joining in, and stay safe.
Bye.
And viewers, thanks for tuning in to this edition of Talking Point. Remember, the reason why we did this today is that there's this talk of the MSP of sugar moving up by maybe a couple of rupees, and that could actually, in Mr. Murkumbi's words, tilt the game even further in favor of some of the existing sugar producers. So do watch out for this policy change. If it comes about, it could be materially beneficial. Thanks so much for tuning in.